Hi everyone, this is Dan and the future holds crypto. I hope that you had some time to watch my previous video. It's called Hidden Secrets of Money, Clash of Old Economic System and Technology, and the Great Reset. So in my previous video, I tried to gather reliable sources and make a summary out of the most important parts of different sources or very reliable sources over the internet, because I really understand that it's very important for everyone to know the history of the economic system and the monetary system, and the whole world's history regarding these two items, because you will see the cycles that it has been through, and it also helps us to understand better where we are at this point, or at least try to understand better where we are now. So I definitely recommend for you to watch it. I know it's kind of a long video, but I think that it will be helpful to understand the history of money, the economic system, and how the things have evolved. Basically, the cycles that you will see there will be much more visible and will help us understand where we are at this point. By the way, before going further into this, I would really appreciate if you hit the like button and the subscribe button, and please share it with your friends and family. This is not financial advice. This is for entertainment purposes only. So now to continue. This is an important part before we get into the next part of this video. So I think it's if you had some time, it will be beneficial for you guys to watch this video first. You can see all of the sources here. You can also look at them independently, depending on on your preference. And what I wanted to underline is that there are cycles in history that that are repeating in the economic and monetary system. So we have something today that's different compared to the other cycles. We have now technology. We didn't have this before. We are in the digital age, and we are seeing actually the clash between the old economic system and the digital age. We also have an emergent asset class, and it's cryptocurrency. We also have a new technology, it's blockchain. We are starting to see decentralized systems being born. Actually, they already have been born, but we are watching an important part of history, and we are watching how these two big systems, the centralized system and decentralized system, actually the second one is it's only beginning, but we are watching and witnessing how the centralized system is fighting the decentralized system or integrating with it. And there has been a lot of progress this year, especially when it comes to blockchain and cryptocurrency. You can see it everywhere. I mean, I've talked about this in my previous videos as well, but you've seen that since the beginning of the year. There was a lot of progress in this area. So you've seen that banks are now allowed to custody crypto. That's huge in itself. We also have seen the first crypto bank, Kraken, that's been approved, and it's in progress. So it is. We have been going through some accelerated evolution in the last part of this year. And now I'm gonna go through some. We've been today. The week actually has started very strong. Today we had two big conferences. We had the IMF conference on cross-border payments. You can find it here. And we also have the DC Fintech Week happening in Washington as well. So this is the cross-border payments conference from IMF had more panels. Two of them were live on YouTube. The first two panels. The first one was a vision, the cross-border payments, a vision for the future. This panel of high-level policymakers will discuss the advent of new digital currencies and future of cross-border payments. The moderator was Kristalina Georgieva, Managing Director of International Monetary Fund. And you see here that we had representatives of official parts of other governments. So we had the Governor of Saudi Arabia Monetary Authority. We had the General Manager of the Bank for International Settlements. We had the Chair of the Federal Reserve and Governor of the Central Bank of Malaysia. The second panel was the private sector. And there, something interesting that you can see here, we had the CEO of Stellar Foundation, the CEO of eCurrency, the Senior VP of MasterCard, and the Cello CEO. So I managed to watch these two panels. I didn't see anything related to the panel, the third panel or the fourth panel. The third one is the public sector's role, and the fourth one is the global roadmap for improvements. It's the G20. The G20 requests that the international task force propose a roadmap for concrete action. So it's basically the talk about the roadmap on the G20. So. No, I didn't have anything here. We didn't see anything public or live on YouTube. But on the first two ones, I managed to go through them, and you will see in the next part of this video some key moments, basically a summary of some of the events that that we have in both the first panel and the second panel. The second conference that started today was the DC Fintech Week, and you see here the points and the subjects. The crypto in Asia, different from everywhere. Flash presentation, the Leviathan of securities law and crypto asset markets. A conversation with Mark Branson, how we regulate Libra in Switzerland. Flash presentation, sovereign digital currencies, the future of money and payments, central banks, CBDCs and crypto economics, a conversation with Brad Garlinghouse, crypto shadow banking, conversation with Brian Brooks, how stable are stable coins, a conversation with Heath Tarbert, which is the head of CFTC, the sci-fi or future in the making, and so on. I'm not going to read everything, but it's on many days. But what I wanted to show you here is you see in the IMF conference, which is probably the biggest from the two. We have a lot of things going on. You see crypto, and you see CBDCs everywhere. I mean, this is the positive aspect of all of this. I mean, it's all over the news, all over the interest for this has grown a lot, and it has gotten full attention. And even with the CBDCs. I mean, you'll see, and you'll see in the summary that I'm going to show you from the IMF. I also added some stuff from the second conference at the end. You'll see that this is happening. I mean, they are saying at one point that this was not decided. They are still looking into it and trying to study the implication and stuff like that. But they are also saying that 80% of the banks, the central banks, are looking into it. I mean, from this perspective, I think the chance of this not being implemented is almost zero. From at least this is how I see it, because if one of these central banks or big players will implement something like this, the others will fall back. And we already have China. China already launched it. Yeah, they call it a pilot, but from my perspective, because I'm working in software development, this is how you do things the best. You start and you do increments. You don't plan for everything from the beginning to have the perfect plan going on the waterfall, and you will see at the end that everything that you planned went out the window. So increments, and they have the right approach there. So I think that this is happening, and something that I told you at the beginning of the video, and then the previous video, we were talking about the centralized versus decentralized system. So the central bank's digital currencies are representing the centralized system. It has central in the bank, the name. So yeah, they are representing the centralized system. And you will also see in the video that one of the panelists will confirm that the CBDCs will offer a better degree of control to the banks. So keep that in mind. I mean, that's transparent. That's already been said. Everybody knows it. So basically, CBDCs is the part of the centralized system, and will bring more control to the government with it. That being said, we will also be seeing in the following part of the video that it is clear that it will be a collaboration between the governments and the central banks and the private sector. They need it. And you will see there in the second panel some representatives from the private sector, one of them being Stellar, which is actually interesting to see that Stellar is there. I mean, they might have a role to play into this. You see that in the other conference, we have Brad Garlinghouse from XRP. And basically, this is where they will have to work together, and this is already being clear. I've seen it in different places. The collaboration between public and private sector is needed and will happen. Also, it is clear that it won't in the private sector. It won't be only one player to get everything. There will be multiple players that will benefit or integrate with these systems and help with the system in general. I mean, don't expect. One of the funny things today is that if we went on the IMF live YouTube video, you have seen there a lot of hardcore XRP fans and XLM fans, and even Bitcoin or other things in general, crypto in general, and they were actually they were having the most messages on the live chat. So I'm also a fan of XRP, and recently I'm considering XLM as well, or Stellar, because I've seen them here there. They will probably play a part in this as well. But it was funny to see that on the IMF page, the most people writing there were actually hardcore cryptocurrency fans. But getting back to this, so yeah, I mean, I think that CBDCs will happen. Cross-border payments will be improved, and it is a priority, and it is very clear that both CBDCs and cross-border payments are a priority. Basically, the private sector will be the one that should be playing the interoperable role between all of the CBDCs, because if you have many, you still have to have an independent asset that can transfer or convert all of these. This is the good part, and you see this everywhere. I mean, it's from this perspective, it's an incredible evolution, or compared to the last years in cryptocurrency or in this domain, right? It's huge. So from another perspective, I've seen some things there and some remarks that the Jerome Powell, for example, the head of the Federal Reserve, is saying that it doesn't matter if China is first. It doesn't matter if the first United States is carefully studying everything, and it's better to get it right than getting first. And they were mentioning a roadmap of 3 to 5 years or something like that. So that's not sure if this will be accelerated or everyone is playing the safest card. I'm not sure. I've seen this in different parts or different videos, different important people saying that even Christine Lagarde, you've seen this in my previous video as well. They're saying that, we are considering CBDCs and stuff like that, but we have to consult with the public sector first. We have to make sure that we are doing everything right, etc. So, well, I'm not saying that they shouldn't do that. I mean, they definitely need to make sure to do it right. But I'm not sure if this is doing things right or the symptoms of a system that was diluted in time by bureaucracy. So we'll have to see this in time, because China is already ahead, and they're saying that it doesn't matter, right? That China is ahead, but I think it will. And it's interesting to see that, for example, Jerome Powell said, the head of the Federal Reserve, is saying that they're not concerned with not being the first. But in the next part of the video, we'll see that the head of CFTC is concerned that they're not going to be the first. And I also included some parts of the conversation or the interview with Brad Garlinghouse to underline some things there in the competition with China. I don't want to get more into this. I'll let you watch the video, the summary with from mostly the IMF and some basic stuff from the DC Fintech Week conference. And at the end, I will also show you something else. We'll see each other after the summary. Thank you.
Good morning, good afternoon, or good evening, depending on where you are. My name is Tobias Adrian. I'm the Financial Counselor and Director of the Monetary and Capital Markets Department here at the International Monetary Fund. We are living in transformative times. We are poised to see significant changes in cross-border payments thanks to new technology and the determination of policymakers. To discuss these changes, we are happy to bring you a half-day conference on the theme Cross-Border Payments, a New Beginning. This conference comprises 4 sessions that will be streamed on the conference website. We are starting this morning with the first session that offers a vision and high-level principles. This is followed by a second panel with the private sector's perspective. Then we move on to the third part, which is on policy responses. And finally, in the fourth session, we're going to talk about a concrete roadmap to enhance cross-border payments. In this first session, high-level policymakers will discuss the advent of new digital currencies and the future of cross-border payments. It is my great pleasure to give the floor to the IMF's Managing Director, Kristalina Georgieva, who will introduce and moderate the session.
To the whole world. And of course, the US plays an incredibly important role in anything that is done in the field of innovation. Some 50 central banks are at different stages of exploring central bank digital currencies. And I want to ask Jay, what is your view on the role central bank digital currencies accessible to households and firms can play domestically, but also what role they could play internationally for cross-border payments? We know that we have had an injection of momentum in this debate. To what extent do you think that the announcement of the Libra in June 2019 has pushed us to move faster in this area? Jay.
Thank you. So good morning from Washington to my international colleagues, and thank you very much, Kristalina, for bringing us together today. And I'd like to start by saying that we are committed to carefully and thoughtfully evaluating the potential costs and benefits of a central bank digital currency for the U.S. economy and payment system, as well as for its international implications. We've been actively participating with other central banks and the BIS in that work, and we feel that collaboration has been very productive. We have not made a decision to issue a CBDC, and we think that there's a great deal of work yet to be done, as well as extensive public consultation to be had with all stakeholders before making such a decision. The dollar is the world's principal reserve currency, as you pointed out, and I assure you that we will be approaching this question with great care. That said, something like 80% of central banks around the world are exploring the idea of issuing currency in digital form. The opportunities and risks presented by a CBDC will differ by country and by jurisdiction, and the decision whether to issue a CBDC will be made by each individual country. So there are several reasons why a central bank might want to do so. For example, there are a number of ways that a CBDC might improve the payment system, and it is mainly this area that motivates our interest. These include basic issues such as faster and cheaper transactions, and more complex issues, from addressing a decline in the use of physical currency to modernizing payments infrastructure to reaching consumers that have traditionally been underserved by financial institutions. Other potential motivations are more macroeconomic in nature. Each jurisdiction will need to think carefully what its principal motivations may be. And for the Federal Reserve, as I mentioned, our main focus is on whether and how a CBDC could improve an already safe, effective, dynamic, and efficient domestic payment system. Unlike some jurisdictions, here in the United States, we continue to see strong demand for cash. Moreover, we have robust and mature financial and banking sectors, and we have a highly banked population, so that many, although not all, already have access to the electronic payments system. Our payment system is evolving quickly as technology advances, for example, with the introduction of instant or fast payments, both private and public, including the FedNow service. We think it's important that any potential CBDC would serve as a complement to, and not a replacement for, cash and current private sector digital forms of the dollar, such as commercial bank money. You asked about Libra, and I agree that it highlighted the need to improve cross-border payments and generally succeeded in focusing attention on payments-related issues, including consumer protection, cybersecurity, and privacy. So it's probably too early to say how much Libra will ultimately shape the payment system. I do think it has caused regulators to think carefully about the appropriate risk management and compliance expectations for emerging innovations. And I would point to the FSB's consultation on global stablecoins as a case in point. I'll stop there. Thanks.
Making a difference. And the question is, how is this impacting the international monetary system? And I cannot think of a better person to answer this question than Agustin. So do you see already CBDCs issued by major countries as a factor to alter the international monetary system? And most importantly, are you concerned that this could lead to fragmentation? Are there risks we should be mindful of, and how do we deal with them? Agustin, what is your thinking? You have a front seat in this discussion.
Well, thank you very much, Kristalina, for having me in this very prestigious panel. It's always a pleasure to participate in all these seminars that the IMF very thoughtfully puts together. Definitely, I think CBDC and payments, cross-border payments, is a very relevant topic. And to answer your question, let me start by establishing a few important facts. First of all, CBDC will always be a national decision. It's a sovereign decision. It will be the third type of liability of a central bank, and therefore it will respond primarily to domestic circumstances. The fact that, for example, China, Sweden, the US, Mexico are at different stages in not in doing it, because with the exception of China, not much has been done in other countries, but in thinking about it, the different stages of the thought process just reflects the different circumstances that each country is facing and the different needs that they have. Now, in our analysis on CBDC, in particular for the use of general use, we tend to establish the equivalence with cash. And there is a huge difference there. For example, in cash, we don't know, for example, who's using a $100 bill today. We don't know who is using a 1,000 peso bill today. The key difference with the CBDC is that central bank will have absolute control on the rules and regulations that will determine the use of that expression of central bank liability. And also, we will have the technology to enforce that. Those two issues are extremely important, and that makes a huge difference with respect to what cash is. Therefore, I think this lends itself to design carefully CBDC in such a way that they will not be a vehicle for fragmentation, for financial instability, and for spillovers. Therefore, I don't think that by themselves CBDC is a threat to the international monetary system. For example, in the issue of currency substitution, if an advanced economy issues a CBDC and somebody in a third country wants to use it, it will require the consent of the central bank of the residence of that person. Therefore, the degree of control will be far bigger. Now, this I think it's good news, because I think that it really provides the ground for us to think on how can we use CBDC to really obtain these higher objectives of facilitating payments internationally. How are we going to make them to reduce costs, to enhance inclusion? How are we going to make this route run smoothly? That is something that so far we haven't achieved. There are many efficiency gains that can be captured, and I think our concentration should be there. The threats to macro financial stability, I think, are limited. And if I understood well Shamsha, because the sound was not that good, she said that those aspects of macro financial instability are more a reflection of other issues, and I tend to agree with her. Thank you very much.
Well, thank you very much, Agustin. To move together in the right way. I used to say the future is digital until I realized the future has arrived. And Jay, you helped me realize that very much. In the summer, you said the following, that you do not want to wake up one day and realize that the dollar is no longer a world reserve currency because we just missed a technological change. I have full confidence this is not going to happen with you at the helm. But can you unpack a little bit this thought? Do you see a first mover advantage in introducing CBDC? Do you think that technology might put us in a difficult place by changing the options in front of us? How do you think, in the fact, about this technology being already present and pressing on this issue?
Thank you. So the sense of that comment was really that I feel that we have an obligation to stay on the forefront of policy and technological innovation and developments as regards payments, cross-border payments, CBDC, all of those things, rather than that I felt anything needed to happen quickly or imminently. In fact, I actually do think this is one of those issues where it's more important for the United States to get it right than it is to be first. Given the dollar's important role globally, it's essential that we remain on the frontier of research and policy development. The dollar is the world's principal reserve currency, and there continues to be large global demand for Federal Reserve notes. There's about $2 trillion worth of Federal Reserve notes in circulation, and we estimate that somewhere close to half of that value in notes is held outside of the United States. Use of and trust in the dollar comes from the reliable rule of law, strong and transparent institutions, deep financial markets, and an open capital account. A healthy and efficient payment system demands these features, which reach far beyond the merely technological. So we do think it's more important to get it right than to be the first. And getting it right means that we not only look at the potential benefits of a CBDC, but also the potential risks and also recognize the important trade-offs that have to be thought through carefully. We have a responsibility both to the U.S. and to the world that any steps taken for a U.S. digital currency be taken safely. We're absolutely committed to the soundness of the dollar and a safe and efficient U.S. dollar payment system. So in addition to assessing the benefits, and there may well be benefits, there are also some quite difficult policy and operational questions that need to be thoroughly evaluated. And just to mention a few, I would mention the need to protect a CBDC from cyber attacks, counterfeiting, and fraud, the question of how a CBDC would affect monetary policy and financial stability, and also how could a CBDC prevent illicit activity while also preserving user privacy and security. Assuming that those things can be resolved, yes, there are potential benefits, but that's going to take a lot of work and thought, we believe. So they're not simple questions, and the answers are going to need to be comprehensively understood. So I'll stop there. Thanks.
Well, thank you, Jay. So very important to indeed keep this balance between aspiring to capture the benefits for people, for the economy, but also be sure that we do it right. Thank you. I am so comforted listening to you, Jay. In this area, the public sector is very indeed, this is a very clear indication that you have no intention to leave the innovation in this area entirely and only in the hands of private sector. Very clearly, you're taking the lead in that. And I would be interested, Jay, how you see it. Clearly, central banks may have to regulate private sector firms. There is space for partnership. There may be need to counter with independent solutions what the private sector is coming up, going back to Libra. How do you see remaining on the front of these developments? What is the Fed thinking in that regard? And how do you see your collaboration with BIS? Agustin mentioned the special partnership with the Federal Reserve System. So how do you see this new frontier and what role you play at it?
Thank you. So let me start by saying that we strongly support the work of the Innovation Hub and would stress that it's very much geared to creating public goods. We will have lots of conversations with industry and stakeholder engagement, and that'll help us in our work on digital currencies and cross-border payments. We need to work collaboratively with the private sector, and we also understand there's a need to do ways that foster development of public goods. So the private sector is likely to be able to contribute through technological innovation. The public sector brings a perspective that seeks broad public benefits. And with payment systems, there are going to be potentially large network effects that create increasing returns to scale, meaning that we may well see over time emerging a small number of dominant players and ultimately great difficulty in competing with those players. Indeed, that is what we see with a number of the tech giants today in their existing businesses away from payments. We do need to collaborate with the private sector to best achieve our goals, and we're very mindful of the challenges of doing so. And yes, we can be and we must be on the forefront of research and policy development. So the Fed has been working for a number of years to better understand the opportunities and risks presented by technological innovation. We're taking a multidisciplinary approach to these issues, bringing together economists, policy analysts, technologists, lawyers, and others to tackle the subject from multiple angles. We've been able to harness the strength of the Federal Reserve System with our 12 reserve banks and the Board of Governors to help us gain a more well-rounded view of the topic. So, for example, to further our understanding of the capabilities and limitations of different technologies and platforms, we've been engaged in a number of research projects. One set of experiments is being carried out at the Board of Governors here in Washington, D.C. Complementary efforts are also now underway, for example, through the Federal Reserve Bank of Boston, which, in collaboration with researchers at MIT, is developing a hypothetical central bank digital currency. These types of experiments advance our understanding of the risks and benefits of CBDCs, measuring trade-offs between different designs and system arrangements, and assessing security risks. On the policy side, we're also actively engaging with a wide variety of stakeholders from government, academia, and the private sector to gather different perspectives and expertise about potential CBDC issues, the range of design options, and other considerations. We anticipate expanding this dialogue to ensure that we're developing a broad and inclusive understanding of these issues. In all of these efforts, collaboration with other central banks around the world continues to be vital. Thus, we continue to offer strong support for the research efforts of the BIS, the Innovation Hub, and in particular for the group of central banks around this BIS that we've been working with to evaluate costs and benefits of CBDC. So we think overall these efforts position us to be able to engage proactively with a wide range of parties on rapid developments in these areas. And as you mentioned, we're doing so within the framework of serving concurrently as supervisor, payment service provider, and issuer of the currency. Central bank money and private dollar-denominated money, particularly commercial bank money, effectively fit together in the current payment system. So any CBDC will necessitate roles for the public and private sector. Thanks.
Thank you very much, Jay. This is fascinating, the speed with which central banks, the Fed, are moving in this direction of making sure that the public interest is protected and is best served with the developments we pursue. And talking about public interest, one of the aspects of our conversation
conference today, cross-border payments, a new beginning. We have a fantastic panel with me today. Let me introduce my panelists. First, we have Dinell Dixon. And second, we have Jonathan Mappelen. And third, we have Rory McFarquhar. And fourth, we have Renee Reinsberg. Now, Dinell is the CEO of Stellar Foundation. She was the COO of Mozilla before that. Stellar, of course, is an open source platform. It's a fantastic world out there. She will introduce to us how Stellar works. Jonathan has had 25 years experience in telecommunications fields. He's the CEO and founder of eCurrency. Now, eCurrency has been a service provider and a solution provider to central banks to implement CBDC solutions. Rory is the senior vice president with MasterCard. He was the senior director for global policy in Google before he joined MasterCard. Now, many of you use a MasterCard. We know what a MasterCard company is, but you probably don't know that MasterCard now calls itself a global multi-rail payments technology company. Last but not least, we have Renee Reinsberg. He is the founder. He works in the C-Lab. He's the founder of Tello. Now, Tello means purpose in Esperanto. You may know that Esperanto is an artificial language designed or devised to facilitate international communication. So we have a fantastic panel today. They will share with us perspectives on cross-border payments, how the market landscape will likely evolve in the next 3 to 5 years, and how do we ensure competition in this digital world? What is the role of standards and the interoperability to ensure there is sufficient competition in this heightened competitive. Let me invite Dinell first to share with us your view. How do you see the cross-border payment markets evolve in the next 3 to 5 years? So what do you think are the factors that would contribute to success to companies like yourself? Thank you very much.
Oh, thank you. It's such a privilege to be here. I think that the answer to that question, particularly the 3 to 5 years and what this looks like in 3 to 5 years, heavily depends on 3 things. I think you have to first consider how good we are at developing easy use cases for developers to be able to develop on top of our open source decentralized network and others that are out there. So that's the first issue. The second one is how much we focus on the use cases themselves, so solving real user problems versus focusing on the technology. And then the third area is really this interoperability point and how good we are at enhancing the existing financial infrastructure that's out there versus trying to supplant it. So I think that it depends, like how we approach each of these 3 areas. I hope that we continue to approach it from a use case piece versus looking at just trying to enhance this technology that's out there. Because if we are really trying to solve user problems and we do that with ease of use in mind, with looking at user interfaces and making sure that we're making them simple, and if we consistently focus on this notion of standards and interoperability, we are going to get to the place where if we do this right, we'll get to the solution in 3 to 5 years that looks like a reduction in friction for the end user and for developers that are developing on these platforms. We'll get to cost efficiency that makes it so that we actually see a decrease in the cost for the end users with respect to these cross-border payments. And we will get to the place of enhanced competition and innovation. And I think that this is all good for the end user, because I think if we focus on each of these areas and we really, really try to make this a competitive platform that allows for awesome innovation, this is what we saw in the early days of the web, when we saw interesting and different use cases that came to light because there was this focus on standards and innovation and competition. And the winner ultimately in that is the end user. So I look forward to 3 to 5 years out there, and I hope that we've done all of these things and that we see this really vibrant marketplace out there of ideas, and we see the cost efficiency that I think that we should see with respect to these pieces.
Back to that, I think, but let me turn to Jonathan now. You heard in the first panel that the governors, they are working very hard on potentially issuing CBDCs. So what do you think of, what kind of role do you think CBDCs can play in cross-border payments? Would they substitute or complement the private sector solutions? Grateful for you to share your view.
Thanks, Dong, and thanks for the opportunity to be here to address this. So when you look at cross-border and cross-border payments, we quickly get to the underlying factors that are pervasive today in cross-border payments that make cross-border payments less efficient and potentially more costly. The primary drivers there are settlement risk, counterparty risk, and the need to hang up a lot of liquidity to execute a cross-border payment. And the private sector is essentially left on its own to try to solve these problems. So where e-currency comes in, and what we work with central banks on, is to make the central bank an important party in cross-border payments, and in fact in central bank digital currency. By empowering the central banks to provide the ballast necessary in cross-border payments, you are actually able to bring down the risks, such as settlement risk, counterparty risk, and you can even eliminate some amount of liquidity risks that are in the cross-border space. And the way we solve it is with technology, by providing the appropriate security technology for central banks and the public sector to underpin cross-border payments. Now, very important here is that the private sector is not in any way eliminated in the process. The private sector also participates. In fact, the private sector executes the transactions. The central banks provide the ballast through central bank digital currency or a public sector bus that can enable cross-border payments, try and reduce or mitigate counterparty risk, try and mitigate settlement risk, and essentially take some locked up liquidity out of the system. And we think we can do that to try and get central banks at the same level as the private sector in enabling cross-border.
Thank you, Jonathan. Maybe I can. You're thinking, how do you fight that battle? Thank you.
Sounds good. And yeah, excited to be here. Thanks for hosting us. Maybe just 3 quick points that cover that a little bit. The first one, I think it's important to keep in mind that cross-border payments are actually expected to rise pretty significantly. I recently saw a number by an official of the Bank of England who said that 2017 we had 150 trillion, and over the next 10 years, so till 2027, that was expected to rise to 250 trillion, so an increase of over 100 trillion, which that's significant, and actually even creates room for new solutions to take up some of that space. I think one factor that we see a lot is the deterioration of correspondent banking that is particularly challenging for island nations, and so there are also new challenges that are kind of arising that can be addressed with new solutions. I would say, and this addresses partly the Libra question as well, I think so much will depend on interoperability and user experience, right? And I'm not convinced that there's one solution, one kind of rail that is going to solve all use cases and be the best possible product for all communities. And so I think those who focus on interoperability, I think, actually have the best chance of being an integral part of that fabric. And I think that's less clear to me how Libra thinks about this, given that they're,
Thank you, Renee. Maybe let me turn back to Dinell, also given your experience at Mozilla. So how do we ensure that in this new world, we will have interoperability across different types of platforms? Now, I understand that on Stellar itself, you have, tokenization allows you to trade all sorts of tokens. It can be CBDCs. Central banks can issue CBDCs on your platform, if I understand it correctly. But how do you actually scale it up? And how do you ensure that, if others, for example, MasterCard has launched a platform, as I understand it, for central banks to test their CBDCs on their platform. Now, for a central bank out there, how do they decide? If I test on Stellar network, would that work also on the MasterCard network? So, these are the issues from a practical point of view would be important for the policymakers to understand. Maybe we can start from Dinell, then maybe swing back to Rory as well. Thank you.
Yeah, thank you, Dong. This is such a great question, and it's one of the things that actually hits back to the question that you asked about Libra. I think that the focus that we have on open, decentralized, permissionless networks, which is what Stellar is, and which is what we focus on building, and we try to actually integrate with the incumbents. Like with respect to MasterCard, for example, we have to make it really simple. For especially when it's a new technology and you're actually trying to integrate with these different stacks that exist out there, you have to make the on-ramp to the network very simple, and that's where the interoperability and the standards come into play. And from just all of my years of focusing on standards, and this is what we did exceptionally well at the very beginning of the web, and when we focused on the internet technology, there was a massive focus on standards and trying to build this ecosystem that anyone could join if they chose to. And all they needed was to understand like how to get onto the internet, and then they could build their own website, or they could build other engagements and opportunities with end users. That's what we're trying to do here in what we call the internet for payments. So it's the same idea. An open permissionless network is important, and making sure that network is easy to interoperate with, which is what we try to do and strive to do here at SDF and on Stellar, but lots of entities out there are trying to do the same thing. This is what creates the opportunity for there not to be a single incumbent, which I think is hugely important in this space, because we've seen years later, 20 years later with respect to the web, what happens when certain players take over and own all of the full stack. It makes it very hard for new ideas and innovation to come up. And so the idea is, if we can continue in this space to make it simple and to create that interoperability and that focus on standards, then we actually can continue the notion of this innovation, which is crucially important to success here. So I think if you think about the on-ramps to Stellar, for example, making it easy for issuing tokens on and issuing value on Stellar is very simple. It takes one line of code to be able to issue whatever token you feel like is important for your business. There are gold tokens, there are silver tokens, there are USD tokens, there are fiat-backed tokens that exist that I think are super useful and very similar to what CBDCs can be. In fact, you could see a central bank issue as a CBDC and then have the private sector and these entities out there that are exceptionally good at having that consumer focus. These fiat-backed entities, they could actually be the glue for the consumer base and the CBDCs to be issued and used on a variety of different networks that are out there. So I think in all of the years that I spent focusing on how to build standards, it takes that you can show the simplicity of it, and then you come together and you really try not to be the winner-take-all model. You really try to understand that in this model, the winners are, again, the ultimate either developers or the end users who are focused on really trying to achieve these cross-border transactions. And you really try to use that glue of making it simple and using standards to get there.
Thank you, Dinelle. Rory, so how do we, given the importance that we should attach to interoperability, the internet works reasonably well because we have the common standard, we have the common protocol. How do we go, achieve that in the digital currency world, in your view?
So first of all, I would completely agree with Dinelle's point that interoperability in the area of digital currencies is absolutely critical. So it's hard to imagine a world in which governments have completely supplanted the private sector in the currency space. So a fully governmental monopoly seems to be not realistic. Governments aren't necessarily going to be the best place to deal with things like user experience, to interface with customers, to innovate. But conversely, it's also hard to imagine governments ceding control to a single private entity. And so the space in the middle, where you have, on the one hand, competing private players, but maintaining a degree of interoperability so that you don't get these balkanized systems that can't transact with each other, that's where we are today. And that's obviously the vision we should strive for the future. The one thing that I would caution about the analogy with the internet is that the financial system isn't a permissionless world in the same way as the internet is. There are very well developed and frankly necessary regulations over money laundering, countering the financing of terrorism, and so on. And when we looked at, for example, at the first version of Libra, we just could not get ourselves comfortable with the idea that all of those concerns were met in the structure that they were putting forward. And so that was not something that we could be a part of. So even as it's vitally important, including in these conversations about central bank digital currency, to bear in mind interoperability, to make sure that every private sector wallet that holds central bank digital currency can transact with a different wallet. Even in that world, it's absolutely critical that we maintain a focus on compliance and on achieving the same standards as the financial sector, as financial regulators demand of the existing system.
Now imagine a world that different central banks have issued their own CBDCs. Now if they are all of different designs, different standards, and if you want to trade them, that's not so different from the current system where you have to get a quote, bilateral quote. It's not a particularly efficient system if you need a lot of human intervention. So how do you actually get to a situation where these CBDCs can be traded automatically on a common platform? Are central banks thinking about that problem, or what do you have any views on that?
The good news, Dong, is that central banks are thinking about this, and there has been a recognition that in the digital realm, central banks need to quickly adopt a new framework. I know as I'm listening to the other speakers talking about currencies, it's a loose term. People just say, well, we can trade this currency or that currency or make up a new currency. And we have to be careful when we talk about currency, because currency is essentially a sovereign instrument. And in every country, it is underpinned by the law of the nation, or in some cases, the law of the union. And these currencies represent a liability on the central bank. It is not a casual instrument where someone wakes up and says, now I have cooked up a new currency because my latest technology allows me to define it as a currency. It doesn't work that way. So the point that you're raising, Dong, is that we have sovereign instruments that are underpinned by the law of the nation that creates a currency that works within the nation's boundaries. Now, rising above that, we have some international reserve currencies. So you have reserve currencies that are also recognized as assets by multiple countries. There are several of those. And so for a transaction to take place from country A to country B, it's not just a matter of two currencies sort of coming together. It's a matter of exchanging from the originating currency into a reserve or a recognized international currency and then back out again. And this is primarily true in developing markets. In developed markets where the country's currency happens to be a reserve currency, well, there's essentially only one exchange that takes place, or the recipient is willing to accept the reserve currency. In the digital world, the question that you asked is quite pertinent. In the digital world, with two countries having a central bank issued digital instrument, how does that exchange happen? Now, the way we see it is that for that exchange to happen in an efficient way, number one, central banks have to participate. So this is not an exercise with just the private sector trying to make this happen. The bilateral nature of two central banks that are in the payment flow have to participate because they become ballast, basically underwriting their own currency on what we call, or what we would think about as, an international cross-border bus. Once they are the ballast on this cross-border bus, private sector participants can participate because they're essentially regulated by their in-country central bank, and the rules of the road are pretty well defined. And so there can be a direct connection between private sector participants in country A and private sector participants in country B. In the middle, there has to be an automated mechanism for the exchange to take place, meaning country A's originating currency gets converted into an exchange currency, and country B then subsequently turns it back into the local currency. And this whole process can be automated as long as the security boundaries of the bus are secure, so that the liquidity or the transaction within the bus can be ensured. The exchange from A to B, A to common currency back to B can take place. The participation of the central banks is what provides the ballast on this bus. Once the central banks are participating, the ability to execute from a CBDC in country A back to a CBDC in country B becomes eminently doable. The technology then that allows this to happen has to be essentially adopted by the central banks, and this is what e-currency focuses on, is to really allow central banks to get up to par on the technology, such that the private sector participants, whether that be commercial banks, e-money operators, payment service providers, or even new entrants like some of my colleagues are, can then participate on it to allow for this cross-border thing to happen. I want to go back to the original point I made when I spoke earlier, which is eliminating the risk components, the settlement risk component, the counterparty risk component, and ultimately reducing the amount of liquidity needed to execute a cross-border transaction is what will bring the cost of cross-border transactions down and the risks associated with cross-border transactions down. So that's what we try to enable.
Thank you, Jonathan. Different public policy, policy objectives. Do you see any way for the public-private partnerships to work? How do central banks and private sector or international institutions, for that matter, collaborate in this space?
So, as I said in my very first answer, I think that public-private collaboration is absolutely critical in this area. There's no question about that. And so I think that there's truth in what Renee says, there's truth in what Jonathan says, and as usual, the right answer is somewhere in the middle. So there are absolutely areas in this space where the public sector has no comparative advantage. None of us want to have apps written by governments in our phones that basically look like they were written by the East German television company. And but at the same time, in terms of creating trust, in terms of creating financial stability, macroeconomic stability, promoting policy goals, there's no disintermediating governments. Governments are there; they should be there. And so the key is figuring out exactly where the lines are drawn, exactly how governments can incentivize private sector players, ensure compliance with very important public policy goals like anti-money laundering, like countering the financing of terrorism. And so, this is what this whole CPMI-driven process is all about. And it's very hard, and it's just starting. I mean, today is the launch of a roadmap, but the roadmap is just the first stage where you're looking at the map and you have the whole road to travel. And so all of us, in the public sector, on the private sector side, we need to be doing our parts in this process. Now, there are areas of this which are really, the work has to be done by the public sector. So there's no question that in things like harmonizing AML CFT, things like extending opening hours of RTGS systems, that is the work of the public sector, and it will make a huge difference to this cross-border space. On the other hand, there are parts of this that are really private sector responsibility, like harmonizing the ISO 20022 data messages to make sure that there's much greater ability to much richer messaging through the financial system and mutual compatibility. So and what the public sector can do is it can convene and it can drive this process forward, and that's essentially, I think, what this conference is just one piece of.
Thank you, Rory.
Well, again, to the conversation on cryptocurrencies and the state, I'm very happy and delighted to welcome Heath Tarbert back to Fintech Week. Now, Heath Tarbert is the chairman of the CFTC, and like many of our speakers, works quite literally at the intersection of issues relating to the soundness and safety of new digital infrastructures. And when you look at the CFTC's particular spate or regulatory perimeter, it is indeed covering a number of cryptocurrencies and digital assets, and or indirectly, and in some instances more directly. And as a result, his views and his decisions are really critical to understanding what happens in the United States and in our markets. So with that, Mr. Chairman, Heath, thank you so very, very much for joining us again at FinTech.
Under the Commodity Exchange Act.
You'd also mentioned CBDCs, and we had a wonderful, as I'd mentioned, a wonderful panel earlier in the day. But I'm really interested for your perspective. I mean, does the CBDC project excite or scare you? I mean, your observations at the outset were very insightful. But how do you view that as potentially impacting your work over at the CFTC? I mean, do you envision that conversation to have relevance for the CFTC, or is it something that you see as really the province of maybe our banking regulators?
Well, I think the creation of it, certainly. So the initial question is, am I excited or scared? And I would say, overall, I'm excited. The only thing that scares me is if the United States falls behind. So I definitely think, given that something like 20% of the world's central banks, particularly the advanced economies, even more so, are working on central bank digital currencies, I think it's encouraging that the Fed is working on it as well. And the United States needs to continue to lead in this area as we lead on most areas of innovation. It is really the province of the Federal Reserve, I think, in terms of creating this currency, certainly for the US dollar. And I'm pleased with what I hear, their collaboration with MIT, for example, in making this happen. I think it's really important that they work with the private sector. The government can do a lot of things, but I think if we were able to harness American innovation to help continue to propel the project forward, my guess is it'll get finished quicker, just like we did when we went to the moon back in 1969. So for us, it would enter our space. We wouldn't be directly, but you could see other central bank digital assets, for example, central bank digital currencies emerging. And because we do have some regulation of certain types of futures and things in the foreign exchange world, our jurisdiction would certainly be implicated at some point.
Chris, it was great to be here again. The two quick short comments. One is I'm amazed every year. You guys do such a great job. That last panel, I think, was indicative of the caliber of people and the caliber of conversation. So congrats. The second thing I think is worth noting, it is good to see you again. It's been a year. And in some ways, I think it's just interesting to think about how much has changed in that year. And in some ways, as I think we'll probably discuss in our discussion today, it's amazing in some ways how little has changed. And I particularly think about some of the regulatory stuff here in the United States when I say that. But it's great to be back. Great to see you again. And thanks for hosting me.
Well, this is great. Well, I think you're already either in the regulatory process or in California out when it comes to the market, the sort of design process.
Look, I've been, over the course of last year, in the last couple of years, I've been kind of outspoken on some of these points. I've been in Silicon Valley for 20 plus years, and I've been, I think, part of the fabric of the evolution of the internet. And it's interesting to me sometimes that the Silicon Valley community sometimes I don't think fully appreciates some of the things it could do better. Expressions like move fast and break stuff, or even Uber's approach at times. I don't find that to be as constructive as it could be. And I think that has informed, that has created a culture at Ripple. We have very specifically tried not to be, quote, disruptors, but rather, how do we be constructive? How do we work with the system? How do we work with regulators? And that has really paid dividends for us in many countries around the world. And I think that we have seen an incredibly positive reaction, incredibly positive engagement from regulators around the world. But as we've already talked about, in the US, I think it was last week or the week before, the Department of Justice put out a 70+ page paper about some dynamics in crypto. And in the document, it references 8 different groups within the US government that have some sort of opinion about how crypto should be viewed, how crypto should be regulated. And the challenge is for companies operating here in the United States, it's really hard to know. You can't have regulation a guessing game. We at Ripple take it very seriously. We take the KYC requirements, BSA requirements, AML requirements very seriously. But when regulation is a guessing game and you have different parts of the government saying different things, that makes it really hard to operate here in the United States. We've, I suppose, made some headlines over the course of last week, about should we continue to be based? Should Ripple, the company, continue to be based here in the United States?
I was about to get into that. Yeah, exactly.
And look, I'm a U.S. citizen. I grew up in Kansas. Ripple's a proud U.S. company for sure. But we find ourselves in this situation where it's not a level playing field for what Ripple is doing in the XRP community is doing. It's really not a level playing field, and that I have to think about that implication for the company.
Okay, so let's sort of think a little bit more concretely about that, and sort of the international dimensions of whenever you're working in digital finance is very often a cross-border business, right? There you have people either moving money from one country to the other. Sometimes talent can be distributed across different kinds of locations, and so business plans are inherently international, something that we've already talked about at length earlier today. Maybe you could just sort of walk us through a little bit from your seat at the top of Ripple, what that looks like in practice. I mean, you had made some very interesting remarks about China. We talked about China with our earlier leaders panel from government, and you had noted not just the regulatory sort of challenge in the United States in terms of there being a very sort of heterogeneous sort of mixture of regulators, but you're also noting from a technology standpoint just how advanced some countries were becoming, especially as it turns or as it relates to crypto. What does that mean for a company like yours that's working really at the sort of cutting edge of digital finance? I mean, what does it mean in terms of the friction and the choices that not just Ripple, but really any company that's dynamic has when trying to decide where to do business, how to do business, and what kind of cost reward trade-off is in that mix?
Right. So I think, like any investment, you think about how do I maximize potential upside, but minimize risk. And I think that when you have certainty and you know how to invest, then that minimizes some level of risk. Your earlier panel was talking a lot about China. I love the Book of Genesis reference. The way I think about the China dynamic, it's not that I disagree with the panelists, it's that I think about it a little bit more broadly. It's not just about CBDCs. When I think about this, China has been incredibly strategic. When they look at crypto and they look at blockchain, they've been very strategic. Premier Xi has actually come out and said, blockchain investment is a critical priority. And they have made huge progress on the CBDC, just airdropping 10 million of their digital yuan to citizens in Shenzhen. It's like they're making real progress here. And I know that the previous panel, I think, fairly kind of says, well, look, it's not really about who's first, it's about how does it mesh well. But we got to also remember, it's not just what China has been doing to the CBDC. Today we sometimes gloss over the fact that there is risk. I mean, we talk about centralized and decentralized in these various technologies. Bitcoin mining is 65 to 75% controlled by Chinese miners. And I think it's hard not to argue that the Chinese Communist Party does not have the opportunity to have control there. I'll take kind of I suppose, alarmist point of view. But what happens if Premier Xi loses $1 million in Bitcoin? You don't think that the Chinese Communist Party has the opportunity to affect a change to the Bitcoin blockchain and make a reverse Premier Xi's $1 million loss of Bitcoin that might have been hacked? So I think that's true for Bitcoin, that's true for ETH. That's, of course, leaving aside the massive energy dynamics and pollution dynamics that we see with Bitcoin and ETH. But it's concerning to me that we here in the United States have given those technologies an advantage. And it goes back to the certainty of the investment you're asking about. Just last week, I was speaking with a developer here in San Francisco, and he was talking about investing and building upon ETH as a development platform. And one of the reasons he cited is, look, there's certainty and clarity about the regulation around ETH. So would I invest in or build upon a different stack when there's not certainty? That's a real issue. And I think you see governments like the UK, like Singapore, like Japan, the UAE, or even Switzerland. These are all really good examples where regulation has provided the clarity of the regulation has provided the ability for a healthy market to develop in a holistic view. And that, I think, helps companies like Ripple, companies that want to invest in this space.
So, when you think about the amount of development in when it comes to national competitiveness, we'll think, well, one country, this is a new technology, so the barriers to entry are low enough that perhaps it's countries can play catch up. Better than almost anyone, what it takes to be a cutting edge actor in this space. When you think about sort of the competition within, again, not just CBDC, but really crypto and even blockchain writ large, and supporting softwares and digital infrastructures. I mean, how accurate is that? How easy or hard is it for an entrant to play catch up and to be competitive? What does that usually take?
I think it's a really important and good question. I think it kind of, as came up in your earlier panel in the context of, is it important to be first or important to get it right? And where there are not network effects, where they're not kind of effects that are kind of the flywheel, then I totally agree that whether you're first, whether you're second, whether you're 10th, the ability to play catch up, I think, no big deal. There are dynamics, though, that kind of what I'll loosely call network effects, where the liquidity of an asset, right? So the fact that Bitcoin is the most liquid digital asset is a good thing. And once you have that, that's helpful to the Bitcoin community. Look, by the way, as much as I get accused of being, anti-Bitcoin, I own Bitcoin. I'm bullish on Bitcoin for sure. So I think that it's important to understand that those advantages that can start because of an uneven playing field, it's not just, oh, okay, now we're a level playing field and it's going to reset to normal. The longer those advantages are in place, the more the competitive dynamics and almost the moats are created. And I think that's hard to overcome. And I think that's why I think China is looking at a very long, not just a decade out, but maybe a century out, and making sure that, look, these underlying technologies really are going to be the underpinnings of the internet of value. And it's going to change the way transactions around cross-border money movement works, certainly where Ripple is focused, but it's going to change how other transactions work as well. I think China is being very smart and very strategic by investing in this and by having a very significant stake in it. And I think it's going to be a challenge just to, hey, the U.S. now has a level playing field with these other technologies. And I'm not even just talking about, how that benefits the XRP community, but others that are doing interesting things that are being responsible players and working with regulators. That I think, all we're asking for is that level playing field.
It's really an interesting and important conversation. I mean, China is their approach is not only domestic, but they do have and have thought about how do you create sort of a digital infrastructure overseas. There's been a longstanding conversation about the internationalization of its currency, and it's interesting how those kinds of things intersect with how they build out their money. I mean, have you been struck by just how much in this last year, since we last talked at Fintech Week, how much that CBDC conversation has taken off, and what do developments in those pockets of the ecosystem mean for Ripple and for XRP?
Well, I have been impressed and frankly even surprised. I commented publicly. I was at Davos, the World Economic Forum event this past February or January, I guess, in Davos. And I remember one of the first comments I got when I was walking down some stairs, and a regular from that country walked by. I was like, "Oh, you're nice to see you." And his comment to me was, "Crypto's still a bad word here." And I thought, that's interesting. I mean, it's a tough way to start the conference. But what's interesting is today, what we have seen and the conversations Ripple is having with various central banks around the world is about 70% of central banks are really looking seriously at this technology. And so I think that is indicative of how that world is changing. Now, that being said, that definitely, I think, is a constructive thing for Ripple and for the XRP community. Just having a central bank issued digital currency still does not solve the dynamic of needing to settle a transaction, settle a payment between the Argentinian peso and the Australian dollar. Having really simple transaction dynamics, both on the messaging and on the liquidity, is still critical to make that work to really enable the internet of value. We think about and we talk about. So I actually see it in some of the work we are doing with central banks around the world. I think it's a very positive dynamic. And look, I think it's still unclear to me exactly how central bank issued digital currencies. Your last panel talked about this. What problems are they solving? Is it circumvention of some of the existing commercial banking infrastructure? How do those dynamics play out? Look, I don't know. What I do know is regardless of how that plays out, you still need you need a neutral asset that doesn't carry that baggage as a central bank issued digital asset. And XRP, as extremely efficient on the speed, extremely efficient on the cost per transaction, and the scalability, is really well suited to help solve that, which is why Ripple has invested where we have.
Tying that all
with anybody who's connected to the internet, and that's a good thing for stablecoins. And then ultimately, really, Chris, I think the real use case of crypto is in a world of increasing integration and increasing globalization. It really makes no sense to think that anyone across borders who wants to transact with each other has to pay a foreign exchange fee to change yen into dollars, let's just say, and then also to pay a money transmitter for the act of hitting the send button and sending that money across a proprietary platform. Imagine if there was a single token that was recognized on both sides of that divide. And when you received it, you could cash it out into your local currency. And when I received it, I could cash it out into my local currency without the need to change it, right? Those kinds of things occupy so many trillions of dollars of friction in the system that it's, when people say there's no killer app to crypto, I sort of think, no. The killer app of crypto is the simplest application, which is avoiding frictions. That's what it's all about, much as the internet did for sending information.
So now that you've seen the summary, I wanted to go back to the fact that they were actually saying that it's not important to be the first, it's important to be the best and stuff like that. So I'm going to go back and say that, it is important to do things right, and that's for sure. I mean, quality, you don't have to remove quality just to get something out the door. I mean, even so, I told you that I work in software development. However, it will be interesting to see if they are actually trying to do this the right way, or we are witnessing the symptoms of a diluted and bureaucratic system that tries to do everything from or dilutes the actions in a lot of different departments of the government or institutions of the government. As Brad said, Brad Garlinghouse said, the CEO of Ripple, said that they have seen a 75 pages report with 8 government institutions having a different opinion on what cryptocurrency is. We've seen that the SEC, actually, that Ripple's case with is it a security or not is dragging for a lot of time. They haven't been able to come to a conclusion yet. I mean, that alone should be showing that they're moving very slow, and it's interesting to see how this goes, because it's either shows the diluted and bureaucratic system that takes too much time to get anything important done, or another thing would be that they're trying to do it the waterfall way, which they're trying to prepare for everything, plan ahead. They won't be able to do that. And they're going to throw the plans away at the end, because doing an incremental release, iterative release, or subsequent releases would be much more helpful. However, this is just my opinion. I certainly don't have a lot of experience in this area, so I might be completely wrong. Bear that in mind. However, in the meanwhile, I showed this in a previous video as well. They're saying that it doesn't matter if China is the first. However, they will gain. I think they will gain territory, and I think they will actually influence the current monetary system by being the first. Also, I showed you a proposal for an Asian digital common currency. If they do this, and China is the player that does this, it will be a huge impact. Central bank digital currencies are currently being considered by many central banks around the world. This column advocates the introduction of an Asian common currency as a multilateral synthetic currency comparable to the euro. So they want to create like something comparable to the euro, specific to the Asian location. So this could be huge, and I will end this video with this one. While these guys are talking in IMF, they are trying to get all of the government bodies in place to they are saying that we need 3 to 5 years to get this done correctly, and basically they're involving a lot of parties, a lot of institutions. They have a lot of talking to do. They have a lot of thinking and meetings to attend to before they reach the decision and the plan to do so or implement it. Meanwhile, in China,
here. Hello there, today I'm in Shenzhen and I met a girl here. She has got something that I don't have. It's a digital RMB. So Fang, show me, how does it look like? This is the app, right? You have to download the app.
Once you slide, you can see the receipt of the payment. And slide next, you can see the payment directly. And you also can make a transaction here by putting in the telephone number.
It looks very easy.
Yes, it's very user-friendly.
Shenzhen initiated a pilot program of distributing some 10 million digital RMB to 50,000 people. That was through lottery and only for people in Luohu, a major district in the city. And each of those lucky people can get 200 digital RMB as gift money. Do you know any other of your friends or colleagues who also get this money?
Actually, no.
You're the only one.
From the friend around, yeah.
Yes, lucky you. Now, over 3,000 stores in Luohu district accept digital money. For example, this one. 这个可以有。哎，请问一下，就是最近用这个人的多不多呀？就这个。
对啊，他们给了2个月了吧？
给了2个月了，就一直等着，终于有人
来用了。
Using digital money, you don't need Wi-Fi. I don't know the technology yet, but it's really convenient.
Actually, I'm very curious about it, and it's like a very novel technology products. And as Shenzhen is a pilot city, so I love to get involved.
So yeah, you've seen this as well. I've seen a lot of people saying that actually US is ahead of the game and they're just waiting to flip the switch and stuff like that. But I wouldn't necessarily count on it. I wouldn't actually dismiss it either. But don't. I told you before, it's important not to create false expectations, right? It's important to consider different possibilities and adjust your plan according to both. So this being said, thank you very much for watching the video. Please like the video, hit the like button and subscribe to the channel, and also share with your friends and family. Have a great day. Bye everyone. See you in the next one.